shifting focus now. Ishan Bansal waiting by, co-founder and CFO at Grow, waiting by very, very patiently as we've overshot this conversation. Thank you so much, Ishan, for coming in and speaking with us. Decent growth, Ishan, at least on the top line. But what's playing out more interestingly is on the margin count, Ishan. Uh, uh, Margins have gotten better; they've inched towards 60%. How sustainable is this kind of movement? And can it only continue to get better? And what are the levers you're using for this?
Got it. Thank you so much first of all for having me here.
Pleasure is
Uh,
ours, Ishan.
so I want to say from our business perspective, large part of our cost, roughly like 90% of our cost is actually fixed in nature. So whenever we have an increase in revenue, it actually flows largely to the bottom line. And that is what is happening in the last quarter as well, where our margin expanded significantly because the most of the growth that we saw on the revenue, there was no real cost that was attached to that revenue. Our costs are broadly of three types. One is we call cost to serve, which was more or less flat or slightly lower actually in absolute terms as well. And another is cost to grow, where we actually invest in marketing and growing the customer base. There we spent a little bit more. And third is people cost, which is probably also has taken a slightly lower number, and hence overall cost is also looking flat to us.
Ishan, can you also take us through how you are pivoting against some of the headwinds which are there in the capital market, especially the F&O side? Where are you diversifying your operations?
So there are like three broad businesses which we have just started. One of them, MTF, which was started a year back, is also started delivering revenue to us. It is already contributing roughly like 4 to 5% of our revenue. Then the second piece, which we have acquired a company called Fisdom, where we are working on wealth management. That will start contributing somewhere around 3% of our revenue. Third is basically commodities, which is another line of business which we just started and will start contributing to our revenue soon. Beyond that, our core business, other than the FNO piece, everything else is still growing really fast and is adding to the diversification from equity derivatives as a business. And the third thing that we are seeing is the customers or the market share that we are getting across all the segments is helping us again deliver better results compared to the market.
Right. So, Ishan, this wealth management piece, that's going to be in within Grow, or is it going to be a separate company eventually?
So most of the businesses that we do are actually as a subsidiaries of Grow. So Grow is a Billion Brains Garage Venture is our parent entity, which actually builds technology for all of our subsidiaries. And wealth management will also be one of the subsidiary that will operate along with the same technology platform that we have built on Grow. But the idea is that all of these are different products that we want our customers to have, and they are asking for it as well. And we have some margin or some monetization across all of these products, which delivers revenue to us.
Ishan, can you also take us through the scale up or the potential which is there in the margin trade funding business which you have? Uh, how quickly you can scale up this business?
So this business obviously is scaling up really well. We've been adding roughly 400 to 600 crores every quarter on the book side. But the way to look at is this is a huge market today. We have almost 1 lakh crore of book available in the market, and we are today like 1.5, 1.6% of this market. And there is a fair share of market, because if you look at from our cash ADTO perspective, we are probably double digit there as well. And we think margin rate funding also we can reach a double digit number. Will it happen in next 2 to 3 years or 4 to 5 years is yet to be seen, because there is a volatility in the growth of this business. When markets are doing well, this is a positive trending product. It actually grows much faster. But when markets are not doing so great, the growth is slightly lower.
the F&O and the derivative piece of your business? Considering 57% of your top line is actually coming in from derivatives, and given the sort of regulations that one has seen with that segment, do you expect this kind of growth return in times to come as well?
So if you look at from a growth perspective, actually that business has taken a hit compared to last year. But every other business, excluding derivatives, actually grew much faster, which is where our overall revenue was still better than the markets. On derivative business, I still feel that we are under-penetrated compared to our equity product, and we will gain market share, and hence there will be a growth in the derivatives business as well. Will market take a hit? That will obviously have an impact on our growth as well. But beyond that, we will still grow in that market as well.
Uh, Give us a sense on how customer acquisition in terms of a trend is playing out. Are CAC costs continuing to rise, and where does it start to plateau, if at all?
So the way to look at the way we look at basically CAC is from a payback perspective. So we roughly target a payback period between 4 to 6 months. And today, I think it is more closer to 6 months. Last year was more closer to 4 months. The way to, when markets are slightly low, the acquisition becomes slightly expensive. So today we are trending somewhere around 1300 to 1400 rupees per customer, whereas last year was more closer to 900. And I think this we are seeing an improvement in the market, especially in last month when NSE active users also for us became positive. And I think for markets also will start becoming positive soon. And hence this cost can, at least CAC can come off if the same trend in the markets continue in the coming months as well.
Management, Ishan, where does that go? Currently, the aspiration is to get it to 3%. How large is the opportunity? Give us 2-3 years what the aspiration, the target could be.
So the way to look at it is this is wealth management is a broader umbrella, but there are multiple products under them, and all those products have a very low penetration today. So we have roughly 3 lakh affluent customers who are somewhere eligible for wealth management as a product. And under wealth management, there are 4 products. One of them is like a regular mutual funds where we earn a distribution income. Second is a PMS, and third is AIFs, and the fourth one is on the unlisted security side. And then there are like insurance, etc. as well. So all of these have a very low penetration. And I think in longer run, our expectation is that out of these 3 lakh, if 10 to 15% or 20% can be converted to the wealth management product, the revenue can be significantly large. But it will depend on how long will it take for us to convert these customers. But what can I say is that the growth rate of this business will be at least double, if not more, compared to the rest of the business in the coming quarters or coming years. Actually, quarters is very difficult because we are still integrating this product. I think this year will be more of an integration phase. I think next year onwards, we will start seeing a much larger growth on this business compared to the overall business.
You're gunning for 20% top line growth, right? Overall business.
Overall business, I think the idea is in longer run, we should be between 20 to 30%.
Sure.
Obviously, there will be ups and downs, but the average should be somewhere between 20 to 30%.
Then you should get tailwind from margins as well on your bottom line.
Correct.
Understood. And with regard to monetization of your mutual fund platform, how does that play out, or what's the strategy there?
So mutual fund is a free product for the customer. It's direct mutual fund, commission free. What we are doing with wealth management is where there will be opportunity for customer to avail advisory. And under advisory, if they choose, there are 2 options for them. One, they can move to regular mutual funds, under which we will provide advisory to them, which will be incidental advisory. And the second option will be choosing a PMS of mutual funds, which is again an advised product managed by our Fisdom as an acquisition, and it will probably will become monetization of the mutual fund piece or mutual fund AUM for us.
Okay, so that's how you play out the monetization game. Okay, Ishan, it's been an absolute pleasure, and thank you for all of the guidances you've given. 20 to 30% growth, viewers, on the top line in the medium term, with possible upside with regard to EBITDA, because 90% of those costs, mind you, on the OPEX side are fixed, and therefore should see good tailwind. Ishan, thank you so much for coming in and speaking with us.
Thank you.